What's going on, everybody? Today I'm revealing the top holdings of my growth stock portfolio I have with Fidelity. So I'm just going to give a quick rundown of my top holdings and then my plan for 2024 and what kind of adjustments I'm looking to make this next year. So, my strategy here with my portfolio is to buy growth stocks, however, not to take unnecessary risks. So, for me to not buy a stock that I feel is a safe growth stock, what I want to look for is a high conviction in a certain name where I'm not taking one of those unnecessary risks. Now, sometimes, like in this portfolio, I do have very small positions in some high growth names that are more speculative. I won't be going over that in this portfolio. It'll just be my core holdings here, which is really the whole growth driver behind my portfolio here. With that said, let me get into this. Now, my number seven largest holding in my portfolio is CrowdStrike. I have about $6,000 worth of shares in this position, and my strategy with this holding is I feel that about 5% of my portfolio I want to be in cybersecurity. The reason being with CrowdStrike is I chose CrowdStrike because I know it was a high quality name. Um, the accounting retention rate of return was high in this name. They focus on endpoint security of the cloud, and this is one of the areas of cybersecurity that's going to be expanding in the upcoming years. So the reason why I feel cybersecurity is a must own in every portfolio is because cybersecurity, there's no way, it's very hard for the stock market to value cybersecurity because innovation, artificial intelligence, it's growing exponentially. And as that grows, as more innovation continues, so does cybersecurity. So, with that said, I could see these stocks high flying continuing next year and in future years. These stocks will pull back a lot when we have a market downturn. But when we're in a bull market, which is about 70% of the time historically, these stocks will easily outperform the upcoming years. So my next largest holding, my sixth largest holding here is Microsoft. I have over $6,000 worth of shares in this account here. So Microsoft, all right, I feel it's easy money. It's the second largest market cap. Right now, I haven't added to Microsoft since last year. I wouldn't add to it at this valuation because right now I feel like it's fairly valued. If you don't have any of Microsoft, maybe I would start dollar cost averaging little by little. Uh, the 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 price earnings ratio right now is a little high compared to historically, so I'm very cautious of Microsoft. But any macro pullbacks, I will add little by little into Microsoft. I'm going to go over my next positions of what I've recently been adding to that I think are better buys currently than Microsoft. But at the end of the day, Microsoft long term is in the driver's seat. It's easy money, and they aren't going anywhere anytime soon. They have a monopoly over products. They got the cloud, artificial intelligence, the office products, you name it, LinkedIn. They have so much growth drivers right now. The stock market's valuing them a lot with their cloud, so Azure, and there's only a few companies which I'm gonna go over that own this market. Leads me to my next stock, which is Amazon. All right, Amazon. I have over $12,000 worth of shares in this portfolio. Now I got in Amazon at the wrong time. I got in right before Jeff Bezos resigned. The stock was going through a tear in 2020 when that happened. With the coronavirus, it was going well. I got in a pretty good position, but it kept going. Right now, they did a stock split, but right now I had bought a lot of shares are in the 160s. Right now, it's trading about 150, I believe, right now, 153, something like that today. So I bought a lot of it when it plateaued for about 18 months. It stayed between 160 and 170. And because I was bullish on this long term, I bought a lot then. So, but I did double down when it crashed during the inflation crisis starting in 2000, about 2022 to the end of 2021 when it started. But I doubled down, and this year had a really great year in Amazon. So Currently, I think I'm up like maybe like 3 to 5%, something like that. But this is actually one of the top picks I have going forward starting now. So, reason being is because Amazon, they got the cloud business number one, just like Microsoft. Amazon, that will continue to grow. Cloud computing is going to be huge, and they're going to be a player in artificial intelligence, a top player, where a lot of platforms are going to be building on Amazon, which is part of their plan. They invested a lot in Anthropic, which is an up and coming like a Chat GPT. They have Claudio AI, I believe it's called. If you've been on the website, it works exactly like Chat GPT. Actually, the people that founded Chat GPT, that built it, they got a last name I can't pronounce. His brother and sister, but Elon Musk was the one who hired them as a head architect of ChatGPT, and they ended up leaving and starting their own business. And so Amazon invested a lot into that company. Very promising. But what Amazon also has going is a couple more things, right? So they got streaming, where they're a large player in. They've had a great year with streaming, which also leads to their advertising, right? So with their e-commerce and also streaming, which I feel where advertising is going more so, if you look at the trends away from social and more into streaming, that's a whole nother topic. But Amazon will benefit from that. But their advertising business right now, they're number three, I believe, behind Meta platforms and Google as far as the leading revenue for advertising, and it's been growing faster than theirs. I think all the major players with their advertising, so they got the trends in the right direction. Their e-commerce business will continue to expand. The gross margins will continue to increase with just the e-commerce alone. Then they got the advertising, the cloud, leader in AI. So the stock's going higher. There's no doubt about that. So I feel like Amazon is a must hold on portfolio, and it's a safe growth stock. So this leads me to my next stock in my portfolio. I have about 20,000, 21 over $21,000 worth of shares in this portfolio of Apple. Now, Apple, I bought most of this back in 2020, back when the 5G was growing a lot of attention. I felt Apple was the leading player to be invested in, and I just been riding out since. I haven't added to Apple in a long time. I believe over a year or maybe even 2 years. I haven't added to Apple. So Apple, I've just been riding it out, and Apple has been historically the greatest stock. It's got the largest market cap. I still believe this stock is easy money going forward. Now, if you look into the top analyst opinions on Apple, they have mixed opinions. Apple has proven itself that it's got top management, where when things look bad, where you think you might want to trim Apple, they end up proving people wrong and they outperform. So I've learned with this stock not to trim it, let it run. I have a plan with this stock, all right, and that is when if Tim Cook, if he resigns from CEO position, that's when I plan on selling my Apple shares. And I believe that he has to make a decision based on his stock options, employee stock options in 2025, I believe. So I'm going to keep my eye open for that, but I have no plans to sell in 2024. The analysts that are bullish on Apple, they believe that their service operations will be the leading growth generator. So with Apple services, this is what the biggest thing they have going for them. The phones, it's been kind of stagnant. We don't know much about AI, but that might be a good thing because there's no high expectations with Apple. So if they do produce with AI, the stock's going to go up. Right now, their multiple, last I checked, was about 27 PE forward earnings. And that's historically kind of high, not as high as Microsoft's, for example. But this position, if we have a macro pullback and it does go in the low 20s forward PE, I would consider adding to this position because I'm still confident this stock's got a lot more to go and it will just continue to outperform. The next position in my portfolio, the third biggest, which I've been adding to a lot recently, is Google. I have over $22,000 in this position in Google. It's actually up 25% since I made a video about a month ago or two saying that this is my strategy to add more into Google. I did that, and so far I had some short-term gains. Still very bullish going forward. I believe their forward PE right now is about 25 at this moment, by which most analysts, including myself, believe that this company is still overvalued. I'm sorry, undervalued. So I still think it's undervalued, and most analysts would agree. It's got phenomenal balance sheet, and it's growing faster than Microsoft or Apple. And it's got a lower PE than Meta Platforms, for example. All right, slightly. Now, Google has so many growth drivers, or so many opportunities, so many big bets, they call them, that it just needs to take one of them to take it to the next leg higher. All right. Previously, the reason why I invest a lot to this company, one of them is because their expectations for artificial intelligence was pretty low. All right. People thought of them as disappointing, and people thought, oh, maybe their search was maybe in jeopardy. I thought that in the beginning of 2023, but then I saw the trends that Google search wasn't going nowhere. It wasn't losing any ground. It's about 90% of all search. And I think that continues. So because I'm confident that they weren't losing ground and they're not going to lose ground in the search. That's why I feel like it's a safe stock still, an easy stock long term to bet on. All right. And I do believe its artificial intelligence will play a role. Now, there'll be other stocks that will do better as far as artificial intelligence goes, I think, but they will participate and it will help their stock on. So the advertised revenue, everything looks good on par. It will continue. Their Google Cloud dropped lately after the last earnings report, and also previously before that. So they have pretty kind of low expectations on their Google Cloud, which is one of the reasons why I'm bullish on the stock, because I think that they too will be part of the big three with Amazon and Microsoft. They will get a part of that share in a growing opportunity. So Google, I mean, it'll continue its dominance. So I have no worries about the stock. I feel like it should be part of everyone's portfolio to be at least dollar cost averaging in this company. And so this leads me to my number two company. My number two holdings in my portfolio. I have over $23,000 worth of this company, and it's Tesla. All right. So Tesla, right now, it's valued as an EV company. All right. A lot of people missed the boat. A lot of people, hit the lotto getting in back in 2019 when the stock, 7x'd within a matter of a couple of years. I pretty much missed that boat. I started off trading Tesla, buying and selling until I actually realized, like, wait a minute, this is one of the best long term opportunities. Then I just started adding into Tesla. Even at the current price it is right now, I think at 270. I think it just went up today a little bit. I still think it's a good buy at 270. But I would wait for a pullback and start the dollar cost average into this position. If it sells off 10-20%, definitely a top buy. So as far as the EV goes, all right, there's a lot of safety there with the strikes, with the auto worker strikes with Ford and GM. It pushed them back. They delayed their electric vehicles a year or two. They're likely probably to delay back again when the time comes. So they delayed it to the end of 2024, both Ford and GM, I believe. And so there's not a competition in America. Now there is with BYD in China, but I don't invest in China. That's another story. But in America, in the West, there's not a competition, really a true competitor in sight. They have a lot more safety because of the strikes. GM and Ford were slightly starting to catch up with them, where they could have been a threat. Tesla now has more time. All right, it's going to help them tremendously. What they had to go through with the unions with the other automakers. So Tesla will continue to grow. Right now, the expectations with Tesla on the Cybertruck are low. It hasn't been a factor with the stock market. So the only news with the Cybertruck would be positive, would push up the stock, if anything. And also the Tesla semis are coming out. They're gonna have semi trucks run on EVs. Tesla's gonna be a leader there. That's not into the price yet. Their whole ecosystem, they kind of remind me of Apple. The way they have the ecosystem with the electric vehicle, the solar panels on houses, the power wall that stores the energy. So they're going to get more and more people into this ecosystem. The infrastructure where you charge the cars, they have all the leading infrastructure with the EV charging networking. So this stock, they are a top managed team. I believe a lot in Elon Musk. The stock will continue to pound higher, and I think it's going to be one of the top stocks in 2024. I think they're going to break through. So look out for that. And most importantly about this stock is, which I believe in, is a self-driving. There was a few companies like GM Cruise that was kind of close. Now, an incident happened with GM Cruise. Their CEO and other co-founder resigned. They're gone. You break away the competition there with GM, and there's not much left. I mean, they almost have like a clear runway. And what will propel the stock to 2, 3, 4x is their self-drive, and eventually they're going to break through where they're going to get approved. Right now they're level 2. They're going to get to level 3 and level 4. It's only a matter of time, and I don't think it'll take longer than people think. People say, "Oh, 5 years, 10 years." No, no, no. I think they're going to break through in 2024, to be honest, and continue to break through. All right. So when that happens, their stock's going to go bananas, and they're going to have self-driving software, which they're going to sell to all these other companies, because the self-driving software, to invest in self-driving, costs billions of dollars. You don't know if they're profitable. There's so many companies that went bankrupt trying to do self-driving. So you got to be well funded to do self-driving. Google Waymo is probably the second best competitor. They're more isolated. They maybe Google benefits from self-driving, maybe not, but I don't really see them as a company that would beat out Tesla in self-driving. And you can see all the demos. I mean, self-driving is already here. If you see all the, if you never experience it yourself, you don't own a Tesla and have self-driving, you can look at the videos on YouTube. It's really impressive. Which leads me to my last stock. My largest holding in my portfolio is Nvidia. Now I have over $55,000 worth of shares in this holding. It's about 33%, a third of my portfolio, and I'm not backing down. I initially got into the stock at $87. Right now it's trading close to 500. So I've more than 4x my initial position in Nvidia, and I still think it's a buy at this moment. If you're not in Nvidia, I'd buy right now in Nvidia because it's not expensive at all, even though it led 2023 the S&P 500 in stocks. But this stock is cheaper than all the semiconductor stocks, and that subsector, semiconductors, has been, and I think will continue to be, the leading subsector in bull markets. And Amazon's trading cheaper than almost all the semiconductors right now. I'm sorry, Nvidia is trading cheaper than almost all of the semiconductors in that space. So it's blown out the last 3 quarters, and the stock's been flat, which is making the share cheaper and cheaper. And I think it'll continue to do that. And there's only so low. I don't see the price to earnings ratios going any lower than it is right now. I think I think it's like 27 or something like that right now, which it should be higher because they are leading in artificial intelligence by far. Their GPUs. So right now, companies are ordering as much chips as they can make. So their demand is unlimited. So their AI potential is unlimited. It's very hard to even value a stock like this when they're getting unlimited amounts of orders. And then eventually, so they get all their chips from TSMC, Taiwan Semiconductors, and Taiwan Semiconductors is opening up a plant in Arizona that's going to be ready in 2025. And when that happens, when that gets in production, a couple years from now, that should double the output. It should help with the geopolitical risks. So this is a long-term buy. I mean, there probably will be a sell-off between now and 2025, a little bit like a pullback. But the next several years to come, at least the next few years, there's not a competitor even close to Nvidia right now. So, and what's important about this with Nvidia is that their chips save companies so much money, and produce the output from their chips are so much better than the other competitor chips. So any company that gets a hold of Nvidia's chips, their revenue, their net income's going to skyrocket, and that's why they have so much pricing power. All right, because their compute power with their chips is the best. No one's close to it, and they're continuing to develop. Either they're not sitting back. I don't see them slowing down. They still got their one of their co-founders is the CEO still. So this stock, it's never looked better, to be honest. The demand's going to keep growing, so this is a must own in a core portfolio. I believe in a growth stock portfolio. This is a must own, and there's going to be other innovations, I believe, in 2024 that'll happen, such as even with medicine, with genomics. Nvidia helps drug companies discover drugs fast. So it's amazing to if you look into that, how it works with these companies, these drug companies discovering, and how they use Nvidia. So there's so many use cases for their GPUs. All right, while other companies, software companies, are trying to figure out use cases for artificial intelligence with their software, that's still to be determined. And by the way, Nvidia has software that's been growing. It's been a segment growing well as also. And as I talked about with the self-driving with Tesla, any self-driving innovation goes through Nvidia's chips. So any self-driving discoveries or any increase in self-driving will help Nvidia. Nvidia stock will skyrocket, just like how ChatGPT did this past year with Nvidia. And it's not stopping, so I'm really high in the stock. And so these are my core holdings. Now, let me quickly end by discussing my 2024 strategy with my core holdings. Now, historically, second years in bull markets tend to perform well, which I believe we're in the second year now. We're starting in October because that was the bottom of October in 2022. We've passed October 2023. So, historically, second year in bull markets have performed well. So I'm invested for a bull market right now for another 9 months. Now, some of these stocks I could take profits next year, but long term, I believe in every single one of these companies. And I would add, my plan is to add as a core portfolio holding in 2024. Eventually, will be a healthcare stock. Right now, I like United Health, but that will be increasingly more part of my portfolio if I take profits. I'll likely add into healthcare. It's more of a defensive name, but also a growth name. Healthcare has also outperformed the market historically. So that's likely what I will do with profits so I don't get greedy. Yeah, but any pullback, macro pullback, these are core holdings, which I'll be adding to. And stick with me with my journey. Hopefully, we can all benefit here and make money. And if you enjoyed this video, click the like button, subscribe to my channel. And I appreciate all of you. And I'll see you in the next video. Look forward. Take care.